This is a question that keeps coming up. What can you buy in Dubai for less than 200,000 euros? My name is Agathe, and I'm well placed to answer this question because I've been living in Dubai since 2013, and for over 10 years, I've been investing in off-plan buy and sell projects here. On this channel, I share all my tips and experience to help you succeed with your real estate investments in this unique market, and above all, to help you avoid the common pitfalls. And let's be clear, if you're tired of unrealistic promises and numbers that don't add up, you're in the right place. Here, I give you concrete and honest advice based only on real-life experience. Make sure to subscribe so you don't miss any of my upcoming videos. So what can you actually buy for 200,000 euros? Just a few years ago, you could find off-plan studios for 100,000 euros. But today, let's be honest, unless you have at least 160 or 170,000 euros, it's become almost impossible. And if you want a quality property with good potential, you should aim more between 180 and 190,000 euros with reliable developers and in strategic neighborhoods. Why have prices gone up? There are several reasons. Post-COVID, the World Expo in 2021, the World Cup in Qatar, and even the war in Ukraine. But the number one factor is the massive increase in population. Dubai welcomes nearly 100,000 new residents per year, which creates strong rental demand. As a result, rents are skyrocketing and purchase prices are following the trend. In this video, I'm going to explain where to invest your 200,000 euros in Dubai. What type of property should you choose? Which neighborhood should you bet on? And above all, which developer should you prioritize? But that's not all. We'll also talk about the mistakes you absolutely must not make and the traps to avoid. And make sure to stay until the end. I'll give you concrete examples of properties you should avoid at all costs. Believe me, if your agent offers you this kind of property, it's time to reconsider your trust in them. Whether you're looking to maximize your rental yield or make a nice capital gain on resale, investment strategies differ. But even if you're focusing on yield, always keep resale in mind. A good yield over a few years can quickly lose all its appeal if you take a big loss when you sell. In a moment, I'll explain exactly what you can buy with 200,000 euros and more importantly, which neighborhood you should focus on to make a truly profitable investment. If your main goal is to maximize rental yield, then the strategy will be clear. Invest in a property capable of generating high income through short-term rentals like Airbnb. With a budget of around 800,000 dirhams or 200,000 euros, you should target a property that is already delivered and ready to be used. Why? Because in a short-term rental strategy, time is money. You need to be able to start generating income as soon as possible. In this price range, the most strategic option today is Business Bay. So, why not other neighborhoods? In Dubai Marina, prices have skyrocketed and we're now out of budget for an interesting property in this range. Downtown is the same story, completely out of reach with 200,000 euros. As for Palm Jumeirah, let's be realistic, it's out of reach, unless you really find a very specific opportunity. So, let's get back to Business Bay. It's an area that remains accessible in this price range, while still offering strong potential for short-term rentals. Its proximity to downtown makes it a highly sought-after area for both tourists and professionals. And another positive point, prices continue to rise in this area. But, and this is a big but, you have to be extremely careful about the quality of the properties you choose. In this budget range, most options are found in older or lower quality buildings. And investing in this type of tower is risky. Why? First, these properties lack liquidity. They're hard to resell because buyers generally look for newer or better maintained properties. Next, maintenance costs are often high in these towers, which quickly eats into your Airbnb income. In short, even if you generate decent rental income in the short term, in the long run, the overall profitability is quite compromised. I promised you concrete examples, so here they are. In Business Bay, one tower you should absolutely avoid is Sapphire Tower. On paper, its prices may seem really attractive, but in reality, the construction quality leaves a lot to be desired, as do the amenities. These weaknesses directly impact the resale value. In Dubai Marina, the towers to avoid in this category include Manchester Tower, Diamond Tower, and also DE Tower. These buildings share the same flaws: aging construction, low appeal for buyers, and high maintenance costs. And as I like to say in these situations, you shouldn't even touch these properties with a 10-foot pole. My recommendation, if you choose to invest in Business Bay, prioritize modern towers, well-maintained and with impeccable management of common areas. Ideally, properties delivered after 2020, built by renowned developers to ensure up-to-date quality standards. These criteria are essential to maximize rental value and avoid issues related to aging buildings. In conclusion, Business Bay can be an interesting option for a rental investment at 200,000 euros. But be careful, this only works if you select a property in a modern tower, not too old and well maintained. Older or poorly managed buildings should absolutely be avoided, as they can seriously compromise the liquidity and profitability of your investment in the long term. If you choose an old tower or an apartment that is poorly maintained, believe me, it's going to be a real headache when it comes time to resell. And on top of that, it's a property that will lose value. So be very selective. Now, let's look at another option, investing with a total budget of 200,000 euros, but without having that amount available in cash right away. Here, the strategy changes completely. In this case, you need to look at off-plan purchases with a staggered payment plan. But be careful. With a budget of 800,000 dirhams or 200,000 euros, you can forget about neighborhoods like Business Bay, Dubai Marina, or downtown. Why? Because for off-plan projects in these areas, we're well beyond that budget. Prices often approach 300,000 euros, even for studios. So you need to focus on up-and-coming neighborhoods. And that's where it gets interesting. These areas offer two key advantages: a high rental yield upon delivery, because these are places where rental demand is already very strong or rapidly growing, and significant potential for capital gains since current prices still reflect a developing market. When these neighborhoods have increased in value in 3 to 5 years, you'll be able to capitalize both on your rental income and on the appreciation of your property. This type of investment is perfect for those who want to play both sides. Attractive rental income from the start and a nice capital gain in the medium term. But you still need to know where to look, and that's exactly what we're going to explore together right now. Among the developing neighborhoods, there are several interesting options. Al Forjan, Dubai La, you have Ravelin Circle, Arjan, and many others. But honestly, I always favor areas that already have at least some basic infrastructure in place while still offering good long-term growth potential. In this category, the two neighborhoods I really want to highlight are JVC and Arjan. Why these two? Because they have a huge advantage, a rental demand that is already strong. These areas are already very popular with residents thanks to their quality of life. And that's not all. In terms of prices for off-plan projects, they remain comparable to other developing neighborhoods, but with a more advanced level of infrastructure. For example, in JVC and Arjan, you already find schools, parks, small shopping centers, and hospitals. In short, amenities that meet the daily needs of residents. Another important factor is their guaranteed future development. The metro is planned for these areas within the next 4 to 5 years. And we all know that better connectivity automatically boosts the appeal, both for residents and investors. Finally, their location is a real advantage. JVC and Arjan are much better connected to the rest of Dubai than more outlying neighborhoods like Dubai Land or Al Forjan. They are close to key areas like Marina or downtown, which puts them at the top for strategic investment. It's for all these reasons that I recommend JVC and Arjan. Competitive prices, strong rental demand, and excellent potential for capital appreciation in the medium term. Now, with a budget of 200,000 euros, you can target two types of properties, a studio or a one-bedroom apartment. But be careful, we're talking here about a medium-term strategy, between 4 and 8 years. And in this case, it's crucial to choose a property that won't lose its value over time. For that, you need to aim for a modern, high-quality property that not only meets the expectations of today's market, but also those of investors and tenants in the years to come. If you go for a one-bedroom apartment with this budget, you risk ending up with a very basic property that won't hold up over 7 or 8 years. That's why in this price range, I recommend aiming for a studio instead. With reputable developers like Imtiaz or Iman, for example, you can find some very interesting options. And if you're willing to go a little over 200,000 euros, you could even look at Ellington, which is really the best. But be careful, it's often just slightly above this budget. Now, if you absolutely want a one-bedroom apartment, you'll need to increase your budget. With developers like Imtiaz or Iman, you'll be looking at a range of 270,000 to 300,000 euros. And with Ellington, it will be even more expensive. And if you really want to stick to 200,000 euros for a one-bedroom, you'll have to turn to less reputable developers. But here, be careful, you're taking a risk with lower quality and a much more limited potential for capital gain on resale. I'm not going to name any names here. I don't want to upset anyone. But if you want to know which developers to avoid, feel free to contact me via the link in the description. In summary, for a budget of 200,000 euros, I think the most strategic choice is still to invest in a quality studio. This way, you secure a solid property with real potential for long-term appreciation, rather than downgrading to a one-bedroom and risking your profitability. At the beginning of the video, I promised you a concrete example of mistakes to avoid, so let's talk about that. We've already mentioned some towers in Business Bay or Marina, the ones that are really cheap and should be avoided at all costs. These are often the ones you see pop up as soon as you set a low budget on platforms like Property Finder or Bayut. But there's an even more dangerous trap. Investing in low-end hotel rooms or hotel residences. Be careful, I'm not talking here about high-end hotel apartments like The Address or similar. No, I'm talking about standard hotel rooms where the operation is entirely managed by a hotel operator. And that's where the problems start. Zero control. You can't decide on the management. You are completely dependent on the hotel operator. There's a real lack of transparency. You have no visibility on profit sharing or the actual fees. And be careful, there's also no liquidity at all. This type of property is almost impossible to sell. Once you've bought it, it's a real headache to find a buyer. And yet, these are products often offered to poorly informed investors, especially tourists. You've probably already seen their stands at the airport or on the promenade at JBR, and they pitch these investments to you with really well-polished marketing arguments. But the reality is that those who buy this type of property end up regretting it. They try to resell and then no one wants it. What you need to remember is that these products should absolutely be avoided. You lose all control over your investment, you have no visibility on its profitability, and above all, no exit strategy. When you invest, it's essential to assess the resale conditions. And in this specific case, they simply don't exist. As a result, your money is locked up or even lost. If a seller insists on selling you this type of product, it's simple, just walk away. Even if it looks appealing on paper, it's really not a good idea. There you go. Now you have a clear idea of what you can buy and above all, what you absolutely must avoid with 200,000 euros in Dubai. Let me know in the comments what you think. And above all, if you have any questions or doubts, don't hesitate to share them. I'll take the time to answer you. I always say it, and I can't repeat it enough. Surround yourself with the right people. Work with professionals who are also investors and who know the market inside out. In Dubai, the real estate market is extremely dynamic, but to invest wisely, you need to take a step back and not rely solely on trends from the past 3 or 4 years. By the way, if you want personalized advice or want to learn more about how to invest in off-plan real estate in Dubai, contact me directly via the link in the description. And who knows, maybe in a few months or a few years, I'll be sharing on this channel the great capital gain that you too will have made thanks to your real estate investment in Dubai. See you soon in the next video.